to appeal for support.
But first, the price of oil is affected by a vast number of factors, with most of us only seeing the end result in the cost of gasoline at the pumps.
But the final price of oil is still mostly set in London and New York, even as demand rockets in the east, driven by China and the roaring tiger economies.
So should the pricing of oil also shift east? And could supply and demand pressures see oil prices soar, just as economic recovery looms? Well, here to tell us more is Christopher Fix, the CEO of Dubai Mercantile Exchange. Mr. Fix, welcome to the show.
Thank you for having me.
Our pleasure.
Thank you very much for being with us. So, start off with that big question. The price of oil is very much set in London, in New York, but we are seeing, particularly for us here in the Middle East, more of a demand, more of a move towards the east. Why is the situation where it stands right now?
You know, there's a historical situation that's developed over the last 2 decades where benchmarking was done out of the U.S. first, around the Houston production areas, around the shipping and the pipelines and the storage that were in that region. And that was a natural place for a price point to be sort of discovered. And that's the West Texas contract. So that's the one that's from the U.S. 10 years later, fast forward, you go to Europe, where the production out of the North Sea became very important. And that also was very close to the trade flows that were happening in Europe. And another separate pricing point emerged, and those two are the ones dominating pricing today. But at the DME, we're now up and coming as the pricing point for the east of Suez market. And as you just mentioned, there's no sign that it's slowing down whatsoever. China is going to be enormous in terms of the economic impact on oil price and the stability of this region in terms of supply.
Absolutely, surely some huge opportunities there. Now, I know you're a bit of an advocate for potentially for a Middle East crude oil benchmark price. How would that affect producers in this part of the world, and what would it mean for the current global oil trading system?
Well, currently, it's very important that the trade flows in our region are reflected by our price. First of all, we need to be more sensitive to the actual crude itself. This is a sour crude. The other two crudes are light. That's a big difference if you have a refinery in China or India who's running Middle Eastern crude. And it could be either Basra or it could be Arabian crude, but our crude, the Omani crude, is very similar to those crudes. And also, we're the ones who are selling directly into that market. So our ships from the DME, we deliver about 13 to 15 million barrels a month. Our oil is going east. So it really reflects the actual trading and economic activity of our region versus those other benchmarks which don't have the oil characteristics and are 12 time zones away.
Absolutely.
So could potentially be the way of the future. Look, Chris, if you can stay with us, we're just going to take a short break. I will be back with you in just a minute. Stay with Emirates 24/7.
Welcome back to Emirates 24/7. We're here with Christopher Fix, the CEO of the Dubai Mercantile Exchange. Thank you for staying with us.
Oh, that's been my pleasure.
So before we went to break, we were talking a little bit about the need for the Middle East to set their own price point. This is something that they have been doing in Oman relatively successfully. Tell me a little bit about the Oman experiment, how that's been working, and how you think that might apply to the rest of the Middle East.
For Oman, this has been a very successful endeavor because for them, this is a ministry, it's not a company. You know, they actually need the revenues for their economy to build schools and hospitals. And having a price point set 2 months in advance, which is what we do on the DME, allows them to predict their cash flow. So they know exactly how much money they're going to get for the oil that's being delivered to their customers, and it makes their government process behind it extremely easy. So for them, it's been a big success.
And right now they're trading, I guess, only with the Omani crude. Is something where you think they might also look at other Middle Eastern crudes as well?
I think eventually, of course, that's an exciting prospect, you know, that we would be using other crudes down the line. And that would be something we're interested in because this pricing mousetrap works very well. And it should be something that we will be able to expand around the region as, you know, different changes in the market. I'm sure you're aware of the regulatory changes and things like that cause decision makers in other Middle Eastern states to say, hey, you know what, we need to take a look at a different pricing model. And we think ours is the best.
And do you see that short or a long-term goal?
I'd say medium term, to be honest. I think that right now, as there's so many discussions in Washington about financial derivatives and all the disasters we've had with the economic crisis, that, you know, this certainty and this transparency People want to know what they're paying for and why, and that we offer that because our customers buy and sell and set the price, not someone just dreaming up a price, that they will eventually make that move, and we're building a better platform to encourage that.
So I wanted to ask you a bit more about some of the wider issues surrounding supply and demand and how that's affecting production and pricing in the Middle East. Obviously, we're seeing the US moving towards self-reliance here. Earlier, you mentioned a huge demand from places like China and India as well. How's that affecting things here?
It's going to have a major impact because the U.S. is not going to be a significant customer for Middle Eastern crude for the first time in 4 decades. This shale boom is a blessing for the U.S. And now the customer base is going to shift as China becomes the world's largest oil importer. So therefore, the customer base is shifting east. India, of course, they have to import all their crude. They don't have any domestic supplies. So that means the relationship between the suppliers in the Gulf region, which has the world's largest oil reserves, is facing the fastest growing customer dynamic on the planet with the Asian tigers in India and China. So the balance is shifting, and that's why this pricing point issue is so important.
Do you think the East will pick up the slack that we're seeing maybe coming from the West?
Absolutely. There's no slowdown whatever. In the fourth quarter of last year, China picked up 400,000 barrels a day increase of oil, and that's been continuing. And the World Bank says that if China grows at 7 to 8%, they'll account for 30% of the global total of economic growth for this year. Yeah. That's a big number.
Absolutely.
Reasonably significant, isn't it?
Yeah.
Speaking of numbers, you've obviously just passed out a rather significant milestone of your own as well, 4 billion barrels per day. What kind of potential do you see DME Oman having it, and what needs to be done to get it there, just quickly?
Yeah, I'm really happy, Katie. We crossed that milestone in February, 4 billion barrels. So that obviously shows you that the contract is gaining momentum, it's successful. People around the world are saying, how do we price this story? How do we understand this east of Suez dynamic? And the way they can price it is by using our oil price, because oil, in a sense, is sort of the currency of commerce. And therefore, if you want to trade it and put a price on it, you need to have something that's close in this region, not in Houston or in London. And I think that that success really builds on that story.
Find a local solution. Well, Christopher, thank you so much for joining us this evening. Really appreciate your time.
Oh, it's been great. Thank you so much.
Pleasure.
Thank you.
Thank you. Well, after the break, we're back with a look at the monumental task that is getting ready for the world's richest